Well, we're at 31. Welcome, everybody. Nice to see you all. Those of you in WA, we've had glorious weather. And I think Kylie's just dropped out, but I think she's going to basically log back in again. So as soon as she's back in, we'll get started. How's the weather in Melbourne and Sydney? Is it nice?
It's raining in Sydney.
It's raining in Sydney.
Yes, not great just at the moment.
Especially now that everybody's out and about. I had a Zoom call today with a lady in the East Coast, and she was all dolled up at lunchtime. And every time I've seen her previously, she's like been very, I don't want to say dowdy, but certainly not looked like she was going out. And today she was all dressed up. She had red lipstick on. And you know, I said to her, "What's going on with you?" And she's like, "I'm out for cocktails tonight." So yeah. That was nice. I'm telling Kylie not to panic. We're all good. So it says it's chilly in Melbourne and hot and humid in Cairns. I bet it is hot and humid in Cairns. Okay, we've got a few more coming in. We'll just let Kylie, but Michael's on the line as well. So Michael's also from Eyeon. So we'll just let Kylie get back in and then we'll get started. So we are recording this session. Just so everybody's aware, so that if you have to hop off early, if you find that you're yawning and you need to go to bed, for those of us in the East Coast, then don't fear, because I'll get the recording out to you anyway. And for everybody else, it just means it's a chance if you want to show it to your committee or your body corporate or your council of owners to actually have that opportunity. So what I'm going to do is I'm going to share my screen now basically, let me just quickly bring up that PowerPoint. So bring up that PowerPoint that we're looking at, financial forensics, there it is. And I'll share that screen with that. So I'll get started, and then I'm sure that Kylie will pop back in again. I'll see her come in on the waiting room. So all right, welcome everybody. Formally now, we've got 32 in the room, which is fantastic. So we're talking about financial forensics for strata. And I'm not talking about the CSI's type of forensics here, which often you might think about, but I'm talking about financial. And we have got Kylie Nelson from Eyeon and also Michael Ferrier. So I'm very grateful. Kylie's actually based in WA, whereas Michael is in Melbourne, correct, Michael?
I'm in Sydney.
Sydney, my apologies. You just said that it was raining in Sydney. I apologise for that. So for those of you who don't know about the Australian Apartment Advocacy, we're the voice of 2.5 million people Australia-wide who choose apartments. We have a number of different things that we provide. Education, obviously something like this, also our education kit. And we've just held a very successful conference for 3 days in Western Australia, which is fantastic. We also act between like builders and developers, or strata managers and lot owners, or even other people within the building and a lot owner. They call me the Erin Brockovich of apartments, which is something that I love to actually brandish. And certainly is something that I'm getting more and more involved with. And I see there's a few people on the screen who actually have engaged me for those services. We lobby government and we do research, and it's all those kinds of things that means that we can actually then provide a better voice for people who choose apartments. Now, the good news is Kylie is back in the room, so that's great. So our education kit we've just launched in Victoria. We're now working on the Queensland version, and the good news is that we just received a grant from the City of Sydney to also do a New South Wales version. And of course, we've launched the dedicated apartment awards for excellence. That's also happened in WA, but we're keen to get that over to the East Coast and make sure that we actually get some opportunities to name and fame those developers and builders who are doing the right thing. Because of course, in New South Wales in particular, there's a lot of naming and shaming going on, and we need to kind of temper it with the examples of people who are doing the right thing. So Eyeon, tell us a bit about Eyeon, Michael, because obviously you set this up in GFC and in 2009, and 12 years later you're still tracking on, which is very good. And obviously you do a lot of different services, don't you?
Look, we're very focused around doing inspections of properties, and I guess for tonight, let's focus mostly on what we do around apartments. So we search the records of strata plans, thousands of them every year, mostly in connection with the sale and purchase of apartments. But we do also do a bit of work where we're specifically asked to search records for a forensic purpose, which is obviously the focus of your talk tonight. So we are looking at the records of dozens of apartment buildings every day. And, you know, there are a lot of trends that we see in those records. Most of the searches that we would do that would be of a forensic nature are going to be connected with a dispute of some form.
Yeah.
And if you like, we can run through, you know, different types of disputes. But to give you a bit of an introduction, yeah, we send people out to do physical searches of the records. But in COVID times, that has moved quite a bit. We're doing quite a lot of our searches remotely now. We either get access to the Strata Managers platform, or we get documents delivered to us through a variety of other ways, you know, from email to Dropbox, you name it. And then sometimes we're still attending Strata Managers' offices to inspect records.
Now, Kylie, darling, are you there? Because I know you're in the room.
I'm here. Can you hear me?
We can. Hello. Now we can see you. Hello. So Kylie and I actually caught up for a coffee a wee while back, and it was all of the interesting stories that she told me that actually made me decide that I need to do this session with her. Because I think for you, like, you love numbers, Kylie. What can I say? Is that correct?
Yes. So my background before Strata is I was a financial controller of one of the well-known real estate agencies here in WA. And my background was finance and accounting for a long time. And then I moved into managing hotels, strata buildings. And so because of my financial background, you know, I would manage hotels like the Mantra Group or Bunker Bay or hotels up in Broome, all across WA. And as such, I needed to learn and educate myself more in the strata industry. And as such, yeah, have become quite well versed and quite an expert actually on the Strata Titles Act, strata managers, strata management, ownership in strata. And that's why I joined forces with Eyeon a couple of years ago. Met with Michael because there was a real need in WA to bring the service that they have over East to our state, because you know, a lot of owners do need that inspection of records and do need to understand financially, you know, that their asset is being managed correctly, and that, you know, the records are in tip-top shape.
I totally agree. Yeah. And I love the way that you use, Kylie, in terms of an asset, because as you know, that I often say when I sit on my council of owners, I look at my $70 million asset and I say, it's not likely that I'm going to own a $70 million asset again in my life. So I put my business hat on and I actually, you know, think about that asset when I make my decisions. But, you know, what we tend to find with council of owners or committees or body corporates is that maybe someone's a bookkeeper, or they previously volunteered to be a bookkeeper for the local sporting association, and suddenly they're now the treasurer for the, you know, the strata company. And sometimes those people don't quite understand all the logistics about the financials, do they?
That's right. And it gets a bit tricky because the ownership does fall on the council members as well as the strata manager. And even more importantly, having a background in strata management, as I know firsthand, that even the strata management companies don't have the qualified accounting staff per se that a normal company might have. They would not normally have a financial controller or an accountant. They usually run the strata accounts with a trust accountant, which is somebody who is largely a bookkeeper also. So there's room for error if you don't get your accounts audited, and even when they're audited, things can go wrong still. So
Yeah. And you don't want to get like, I know you told me a couple of stories which were just amazing, because if you get it wrong, by boy, do you get it wrong, right? And you can be out of pocket, you know, hundreds and thousands of dollars. And that's a real concern, isn't it?
That's correct. Yes, there's been many situations that I've been involved in within strata consulting capacity, with disputes where owners have been hit with huge levies suddenly because their balance sheets were wrong.
Yeah.
You know, things like that, and the accounting wasn't there, or money has gone missing, or there's been mismanagement.
Yeah. And the number of stratas I speak to, Kylie, who actually are not, you know, like they're basically bankrupt. And it's unfortunate that, you know, they've actually made some decisions with their strata manager, and it's not been the right calculations. And they've overspent, for example, on defect repairs, and suddenly they're out of pocket and they're scrambling around trying to cut costs and trying to raise funds. And that's not fun for anyone, is it?
No, and as I said to you when we met, that you know, this, in a lot of cases, this is people's life savings, and or their very first attempt at buying into the market, so they've really stretched themselves financially. And whether it's a defect, a building with a lot of defects that have been mismanaged and they were hit with large levies, or a building where financially the management is not suffice, you know, it can ruin lives. It can cause huge mental health issues, and it can, you know, ruin you financially if you don't get it right. So it's important to make sure that whoever's managing you is doing, you know, the right job, and the committee is understanding of their own obligations and processes as well of what they are required to do.
Correct. So tell me, like, when you talk about the financial forensics, what does that actually entail? What is the kind of things that you do in your kind of line of work?
So as Michael mentioned, we're predominantly around reports during the sales transactions, which is very important because they want to know, has there been special levies raised a lot? Is there a poor reserve fund management? Has there been, you know, items that have been put to meetings and, you know, and so it's been proposed on the budget, but it's been knocked back repeatedly. So, you know, you need to look at that in the records, and that can go back 6-7 years to get a story such as that, so that when you buy in, you don't suddenly get hit with a huge amount of work to do. I've had, you know, largely a lot of what I see now, sadly, is mismanagement by strata managers. And that is where the committee is actually doing the right things. They are trying to gain the proper records and to financially review the financials and to audit them and take a look at it closely, but the strata manager is not forthcoming with that information, or there is a lot of errors within the financials and nobody really quite knows where to start. So financial auditing services we've seen, which is something we don't provide, that's an accountant's firm, but we would often, you know, data collect so that somebody could have their financials really looked over to see if there's been any misappropriation of funds, which happens, or, you know, if there's errors within the financials. I mean, often there can be incidences where strata companies pay other strata companies bills because of the failure in processes with the strata management agency. So there's a lot that can go wrong, and it does go wrong in all businesses. Don't get me wrong. Every company I work for, there are errors in finance departments. It's about how you catch those and the processes you need to ensure, well, that's fine, but we just need to make sure we're catching those and we're rectifying those on an annual basis.
Yeah.
So if I could just add to that, I think a lot of these issues can come up, and many owners, and you will see this in your own work, many owners have a very hands-off attitude to the property that they own, and as long as the basic services in the building work, they're not necessarily that interested in being involved. There's normally a small proportion of owners who do take an active interest. And as Kylie said, those people, you know, do bear the brunt of making sure that the building does operate okay. Strata managers are under their own pressures. You know, they're operating or managing a portfolio of properties, and they're very busy. And so, you know, that's not an excuse, but but things happen for a variety of reasons.
Mhm.
And when things go wrong, people get cranky. and that's where you see disputes. Now, people can buy into a building and find that there's issues there they weren't aware of. And that's where our basic service is around due diligence. So people can understand what they're buying into and understand the state of the finances, the state of the building itself, and so on. But then, when bad things happen, then people get cranky. That's when you get disputes. And that's when you need to look back at the records in more detail. And that's where we can help by coming in and collecting that data that would then be looked at by a financial forensic analyst.
I agree totally.
Yeah.
And Kylie also spoke about when you change from one strata management company to another, that's also a key time when you actually may, then decide to actually have a service such as yours come in. Is that correct?
It can be. And this is an area that we see a lot in our work, is that when buildings change strata managers, that there's often a very poor transfer of records. And so the owners, and it's the owner's records here, the records don't belong to the strata manager, they belong to the building. The owners finish up with an incomplete set of records. And because of that, it can be an incomplete trail if you do have to look back at things that have happened in the past.
Yeah, correct.
Yeah.
Correct. And, it's also a good idea to have somebody independent where there isn't that emotional kind of, baggage, you might say, involved in the process. A third party is always a good idea,
Yes.
So I guess the next thing I wanted to kind of talk to you about is, so typically, an owner might think that this kind of financial analysis is something the strata manager will undertake on behalf of the strata company. Is that correct, Kylie?
So there's an obligation in most strata management contracts that the strata manager is undertaking administrative duties, but it's always on the proviso that it would be under instruction. So they say, everything we do is under instruction from the council of owners or the committee members, depending on what state you're in. And so often the strata managers will just do the basic as per their contracts, i.e. open bank accounts, process invoices, create financials. But often the checking of those financials really does fall to the treasurer or the chairman or the council of owners as a whole, if they haven't nominated relevant positions as they should. The buck does fall to them. So if something's wrong, which it does happen, often you won't get much from the strata manager in relation to compensation or responsibility taken, because they're very clear that they're not accountants. They will manage your bank accounts and they'll process your invoices similar to bookkeepers. But if there's errors within the balance sheets or errors, within the accounting themselves, then that should really be something the council of owners engages a third party to audit their accounts each year, or somebody on the committee has the ability or skill set to do that with the strata manager's assistance. That's generally the way that it works in WA. I don't know, Mike, was it similar in Sydney?
Yeah. I think the rules are, are not dissimilar here. And the most buildings, larger buildings will have their accounts audited, but a lot of buildings don't. And so they really are an agreement between the strata manager who's preparing the accounts and the owners themselves, that they're happy that represents, the financial position in the company at any one time. And remembering that strata accounts are largely cash accounts. They really, so Sam, at the beginning you mentioned about your building being a $70 million asset, but there's no $70 million asset shown on the balance sheet in strata accounts. There might be a few $100,000 on that balance sheet. And so, they don't really represent, the actual asset that they're insuring, for example. In New South Wales, we have some older structures, company title structures, and In the accounts for those, you'll often see the value of the building shown in the accounts, but it may be an historical cost. It may not be a current value.
Yes, correct.
So, yeah.
Correct.
So they are a simplified version of financial accounts, and people don't often realise that either, as well. So
yeah, that's a good idea. So Kylie, like if I'm a treasurer, what are some of the telltale signs that I might think to myself, that doesn't look right, or that might be something I want to have a third party investigate? What kind of things besides large siphoning of cash out of the account?
Well, obviously you're always looking from month to month that the budget is tracking with the actuals. So if there's suddenly a huge amount of expenditure there that wasn't approved by the council or what isn't tracking with the budget, then that's a red flag. Simple things that nobody does, and I've been wanting Scarwa over here actually to run a session for owners, and hopefully they will soon, is just almost like a tick box process of each year when you're adopting your financials, because that's quite important that you're adopting the correct financials from year to year, and especially between strata management companies, is that the opening balance matches the closing balance for the previous year. You would be surprised how many times the opening balance on a P&L, which we class as an income and expenditure statement, does not match the closing balance of the year before. And nobody thinks to look for these things. You know, that the cash at bank looks about right, that if you know you've got term deposits that you've instructed the strata manager to invest for you in, you know, spare cash you might have in your CapEx funds or reserve funds, as they call them over here, that is showing on your balance sheet. Other telltale items that come up, simple things, just, well, if I'm GST registered company and I've spent this much in expenditure, then my GST, you know, in my balance sheet should be showing roughly 10% of that. If it's triple, then there's something wrong there. But again, the average person, unless they have the skill set and the qualification from their work life, so to speak, they're not going to know what to look for these. And that's why it's important to get auditors. They're actually not as expensive as people think, and they'll save you a lot of money in the long run.
Well, and I've also, you know, had situations where, people actually have, like I talked before about, with the fact that, you know, they've actually overspent and it's not actually shown. And I even heard of a situation where there was a transfer of strata managers and the previous strata manager actually hadn't paid GST for 5 years. Like, yes. How is that possible?
Yes, that does happen, and I've actually been involved in an agency which did do that. Same with income tax. So if you earn interest off term deposits, and there are some complexes out there, especially in the eastern states, with very, very large investments, and they are earning 30 to 60,000 in interest a year. Some of them can be, and they have not paid income tax for the last 10 years. You know, there's a big whopping fine. Yeah, but it does happen. And whose role is it? You know, so the strata manager will often say, well, we're not tax accountants, but, you know, we do our best. And, it's really up to the treasurer to be picking this up and making sure that, you know, together we're you know, meeting our tax obligations. But that, yes, that can definitely happen. Yeah.
So what are the kinds of questions that at an AGM the treasurer should be asking of their strata manager?
So normally the treasurer wouldn't field questions at an AGM. That's normally prior to an AGM with a committee meeting. Yeah. The treasurer should be, you know, reviewing the accounts before they are happy to put them on the table at an AGM and ask the meeting via way of motion to adopt those financials. That really should be done prior to the AGM. And most strata managers will stipulate, so that the meeting doesn't go on for hours, we'll actually say if any owner has any queries regarding the financials, they're to submit them within 3 days of the meeting, so they can be reviewed and then answered at the meeting or prior. So often the meeting is just to pass motions and to move on for the next year, and queries would normally be handled outside of that. And that's another reason why it's good to get your records inspected here and there, because you aren't really privy to that background information, or they may not be aware that there's this huge mismanagement problem that the treasurer and the secretary and the chairman have fixed with the strata manager to make it look great by the time you all sit down at a meeting. They might be aware, you just don't know that. So,
oh, Kylie, that's very cynical, darling.
no, well, this is part of, this happens in any company with a board of directors. They do the same. Before you present at your AGM, you've got to work on iron out all the issues and things like that. So yeah, so there's a lot that goes on in the background that people don't see, that committee members and strata managers work on together, for sure.
I think just to add to that, Sam,
Yeah, sure.
I mean, essentially, strata financials are cash in, cash out, to simplify it. And so if the treasurer, and he may be called a treasurer, but he may not have a financial background, by the way, it's just an old-fashioned term that somebody who says, oh, I'll take that responsibility on. But essentially behind that income and expenditure statement will be detailed for every line item. There'll be a detailed list of transactions, and so a review of that should help to identify anything that looks unusual, because essentially levies are coming in quarterly, and then periodic bills are being paid out. Some are annual, like insurance, unless they're paid on a monthly basis. Others will be paid, if there's a building manager, they'll be paid, every month. Gardeners, whatever it is, utilities, they're pretty obvious, most of them. And so having a good look at that stuff is a good start. Yeah.
So Kylie, so the treasurer should be making sure that the GST is being paid, any income tax if they're actually got, because our council of owners have got money into a term deposit to kind of like accrue interest. So any income tax that needs to be paid. Is there anything else that would be on your hit list that you would think a treasurer needs to ask their strata manager?
Well, I also just want to comment that if a strata company was GST registered, then they should be, by way of the strata manager, insisting that they do have a third-party accountant anyway. Most strata companies will have a third-party accountant who, if you do that and they lodge your GST returns every quarter and they're reviewing your accounts and lodging your tax returns, then ultimately the responsibility should fall with that accountant that you've engaged to ensure you're being compliant. But where somebody is saying, no, we want the strata manager to do it, and we'll just, lodge a tax return once a year, we won't ask the accountant to do anything or review it, then yes, questions would be, is the GST up to date? Does the GST balance with the financial accounts for the year that we've been putting in each quarter? Is there any income that we need to declare for the financial year? And this is interesting, is that a lot of strata companies will have financial years that vary in date ranges, and you would be aware of this. They might start from the 1st of January to the 31st of December. But obviously the tax department doesn't care what your financial year is. The tax department wants you to lodge a tax return on their tax year, which is obviously 1st of July to 30th of June. So there can be some discrepancies there as well, to make sure that the tax returns are being lodged on time and that the accounts are being reviewed in line with the tax year, not just your financial year. So that's something to check off. And another one that happens from time to time, not a huge deal, is probably when we have caretakers or somebody that we've put on the books for a strata company. We might pay them like a salary as such, rather than they're a contractor. And so there might be obligations to pay super or their PAYGI, PAYG tax withholding and things like that. So it's important to make sure you're up to date with things like that if you're in that circumstance, because you can get into a lot of trouble there. But again, if you have an external accountant, they should manage a lot of this for you. It's just finding the right one and making sure that they've got the instruction that is what you expect of them to do, not just plug the figures in and process your tax return and that's it. You want that advice.
Yeah, and that's correct. And we even heard of a building the other day where they actually did have a caretaker or a building manager. They housed him in one of the apartments in the building, and were unbeknownst to them, they actually had to pay fringe benefit tax, right?
Yes, that's
it wasn't until they had the new strata manager that they were like, oh, you know, there was all these things that they hadn't thought about, and rightly so, like you said, Michael. Like some of these people don't have financial backgrounds.
No.
So that's why you need to rely, A, on your strata manager, but B, like you say, Kylie, on your accountant. And if you haven't got an accountant in your team, you may want to ask your strata manager why.
Yes, strongly suggest one, because strata managers are not qualified accountants. That's
No.
not, they never claim to be, they never will be. They're strata managers.
Yeah, so, that's right. And they're not building managers either, right? That needs to be clearly said as well. Now, Kylie, you told me about a fabulous case study where there were a number of people who actually had outstanding accounts, you know, in terms of hadn't paid their levies or their fees for a number of years. Yes. And then they transferred the strata manager. Tell us a little bit about what happened in that situation.
Yeah, so this is something to watch out for. And honestly, I haven't seen this too much in my career thus far. This is the first time I've seen this, but now I will definitely watch out for it. Is that they had a strata company that changed from one strata manager to a second strata manager, and that strata company had 2 or 3 lots that had accrued levy debts for up to 5 years, going back 5 years. These lots were, you know, facing bankruptcy, and there was a lot of court action going on in the background to take possession of the lots, to pay the levy balances. And obviously, as we're aware, there is a obligation for the strata company to be charging interest in accordance with the Strata Titles Act on overdue levies. And so, you know, this sits there and accumulates in the background. So once the lot would settle, when it eventually settles and the strata company can eventually get paid, and in this instance, it was after 7 years, they eventually had these 2 lots, and the lots owed, you know, thousands of dollars in levies and up to around $40,000 in interest. That's was significant. Now, when the change in strata manager happened, the previous strata manager didn't think to calculate the interest on the overdue levies for the handover, because normally a lot of strata managers will wait until settlement if something's in court and then calculate it as a whole and then add it to the settlement. Some will do that. Most will apply interest on a monthly basis, so you can always see, but some kind of wait. Now, in this instance, they were not up to date with their interest on these owners' ledgers. So when it did pass over to the new strata managers, the new strata managers were not aware that the interest was not up to date. So when it was the lot sold, they gave a statement, a Section 110 is what we call it over here in Perth, for sale, which would outline all the debts owed, which includes penalty interest. And there was a huge amount missing. And it wasn't until the treasurer of the strata company, you know, said, hey, did anyone think to check that all the interest had been charged over the last 7 years and it balanced with what it should be? And everyone said no. And so they undertook that exercise, and they realised that they'd missed out on a huge chunk, about $30,000 of interest did not go. Now, there's no recourse after settlement to go back to that old lot owner and get that interest now. They missed the boat. They had the chance to do it at settlement, and that was it. So that's a lot of lost revenue. So
it is.
Yeah, unfortunate situation. And it's iffy, because was it the new strata manager's responsibility? Was it the last strata manager's responsibility? Was it the treasury
committee?
Was it the committee? Who, you know, and really the answer is it was each party played a role. They all should have, you know, undertook or thought about this, but sadly it just didn't. I think everyone was just happy they're finally getting their levies. So, yeah.
Well, I can understand that. I've got a couple of questions from the audience, which I'll take quickly if that's okay with you, Kylie. Yeah. So someone has said here that what action can they take, and this is based in WA, when the strata manager won't allow an auditor to access the accounts?
So there's, in regards to the very first step is that you would officially apply to inspect the records if the strata manager will not hand over the records for an auditor. So an owner can apply to inspect the records, and the ownership on the strata manager would be that they have to respond within 3 business days to make a time to inspect those records, and that time has to be within I think it's 10 days that they need to make an appointment and make the records available. If they don't make the records available in their entirety to where this owner could then go and get the records audited themselves, then there is heavy fines, and they can be, well over $2,000. And how you would obtain one of those is you would apply to the State Administration Tribunal here in WA for a hearing to say that the strata manager is breaching the act whereby they are not complying with my request to inspect the records and to provide this information so I can get the accounts audited, and therefore the tribunal would make an order to insist that the strata manager hands over those records within a certain amount of time and apply a fine.
You can also call me and I'll call that strata manager. So that option as well.
Yeah. Sam, you do assist in those circumstances. I've heard about you.
Try me first. But
Yes.
I think Kylie's option is also a good option, right? So I think you're right. Write to them first and formally request to have access. If they don't say yes, then let me call them. And if they still say no, then we'll go to SEP, right?
Yes.
So,
Yes.
Sam, just on that point, I think
Michael.
something that comes up quite regularly where people are having issues getting access to records is that you may ask the question why. Now, what you see in quite a lot of buildings is that the people who are in control of the strata committee may not be operating the building in a way that a lot of the owners are happy with.
Yeah.
But they don't want things to change because it suits them individually. And so they can put pressure on the strata manager sometimes to stop other owners getting access to information because they don't want things to change. And for an example, we've seen examples where levies in buildings are ridiculously too low, that the building is falling into a poor state of repair. And the chairman of the strata committee, who gets enough proxies to get things passed, doesn't want increased levies. And you get other owners who are getting worried about the state of the building, the lifts keep breaking down, whatever it is, and they run into all sorts of roadblocks when they're trying to change things. And then they have to really rally their forces and eventually take control of the committee so that they can actually get some changes happened. And I think a lot of the disputes, a lot of the reasons where people may be looking to have a closer look at accounts come back to issues like that. And
I actually attended an AGM the other day with a proxy where there was that exact situation happening, where the building was 20 years old, it had concrete cancer, it was setting off the fire alarm because of the moisture, the lift was breaking down. And there was a number of investors who were actually deeply worried about the state of the building, who actually then engaged me to attend the AGM, whereas the owner occupiers were kind of like saying, well, we don't want to increase the cost.
No.
And like I said, you can't drive a car for 20 years without servicing it. What makes you think you can live in a building for 20 years without servicing it, No,
that's right, precisely. But that, they don't want their ongoing costs to increase. And many will fight it quite hard, even though they can see the building falling down around them.
Yeah, unbelievable. It really is. I've had another question here. Often I interpret financial reports as part of my work, and I've only ever seen the balance sheet and profit and loss statements, among other reports, not all the individual transactions that make up the reports. Can I ask for the individual transactions? Now, I'm assuming that's the same, right, as basically being audited, correct, Kylie?
Yes, you can ask for those. Every strata manager would normally have that detail, very easy at the fingertips. And 9 times out of 10, it's just a simple email to say, I want the detailed expenses or the detailed revenue behind these figures, and it would be forthcoming. You just need to request it. In most cases.
Yeah, that's correct. All right. So give me a case example where an audit should have been undertaken and was not, and the implications.
Michael, do you want to take this, or do you?
Oh well, gosh, there's a number of of issues. In fact, look, for example, we were looking at a building just this week where there is a legal action now going on between the previous strata manager and the owners over charges. that the strata manager had levied on the owners corporation, or the strata company as they call it in WA. And so this is a situation where they'd been overcharging for years, and it was only really realised when a new strata manager came in. So there hadn't been any annual audit done of their fees, what they were charging for example. And now they've got to go through a process, you know, through legal proceedings to try and recover. And it's quite a large amount of money. Now, so that's just one example, you know, of where some sort of forensic audit could have taken. We also see situations where there have been strata managers who have perhaps been favouring particular suppliers, where they may have been awarding ongoing contracts and perhaps getting kickbacks from particular suppliers. That's another area of concern. Oh gosh, and there's probably plenty of others. The other area is where, and goes back to this issue I mentioned before, about particular individuals trying to control the operation of the building, particular owners trying to control the operation of the building, where particular rules or particular expenditure in the building may have been diverted for the benefit of particular owners and not for the community in general. So all of those issues can have been going on for quite a long time before they actually come to light.
How does that happen?
Well, you can have a situation where somebody has gotten approval for a renovation, for example, without following the proper rules. And then when that's been discovered, then some of the costs of removing it or having it done properly are sheeted home to the owners corporation rather than to the individual. But that's an example. No,
I've seen that happen as well. So often with parking and carports and stuff like that.
Or it can be more major things. I mean, we saw a building in the last couple of weeks where there had been a number of illegal renovations done, including adding bedrooms to apartments, putting up like full walls in the apartments without any approvals, and they only found out about it, you know, down the track.
That's probably they would have heard the noise. Come on now.
Well, I know. Look, I know. I mean, you sort of step back and you think, how could this have happened without people knowing? But it's still.
You know what they say about people keeping to themselves. You know, you know how they say about the serial killer. He was always such a nice, quiet type.
Exactly.
Yeah. I mean, I was involved in one about 5 years ago where an owner bought the 2 units. So it was a 5-story building with 2 units on each floor, and the owner bought the 2 bottom units, and they did tell us they were going to renovate, and the strata company did approve that they would have a kitchen renovation and tiling redone and things like that. So the noise was not a surprise, but once they sold it a year later, we realised they combined the 2 apartments into one.
They removed it.
That's right. Now that
low-bearing wall. Did they remove a low-bearing wall?
No, I know, and it changed the plot ratio. It changed a lot of things for the strata plan. Changed the insurance, you know, and it was a nightmare. And it cost the strata company thousands of dollars to, you know, take this owner on and to rectify all this. And boy,
oh boy. So that's what not to do, people. Do you hear me? So if you're going to renovate your apartment, make sure that you actually do get approvals, even though it can be kind of like, troublesome. All right. So I think my last question to you was, you know, if you were speaking to a strata company, what would be your advice, or what would you say to them?
So in regards to financial things, so it's, you know, always making sure that the strata management company that you choose, you know, has good references and a good background of managing clients financially well. Where you can, try and check that there's, you know, been no complaints to ASIC about their compliance, which is actually very easy to do. People don't realise you can check it. Obviously, you know, you want to make sure that the people on your committee that are taking on these roles, if you don't have the time, you know, are, you know, suitably qualified or are, you know, making an effort. Because if they're not, then, you know, the owners group does have a responsibility to sit down at their AGM and make sure that the committee members are, you know, doing the right thing on behalf of all owners. And then obviously, yeah, the big one is when you first buy in, get the records inspected, because, you know, you need to know what you're buying into and what's happening. And that can be with just simply, you know, like whether there's an owner in there that constantly takes the strata to court or to SAD. And it's just, you know, vexatious, because in the law of strata, there is no room for vexatious, you know, rulings. And so an owner is free to, you know, bring about as many legal hearings on a strata company as they see fit, and the tribunal has to hear every single one of them. So, you know, that can be a huge cost as well. So there's lots, you know, lots to look at. But once you're managing it, just making sure that you have an external accountant, especially if you're GST registered, that the strata, somebody is reviewing the financials, that somebody looks at the detail behind the figures at least once a year before you adopt the financials, and that, you know, levies are in line with the budget and the expenses are generally in line with the budget as well. Michael, do you want to add anything?
I think
look, the only thing I would add,
great advice here.
Yeah, Sam, the only thing that I would add to that is really for owners to take an active interest in their asset, and for more owners to actually get involved, because as I said at the start, a lot of them, you know, they really don't have any interest in being involved. But when there's a problem, if they do have to stump up for additional levies, then of course they're shock and horror. And I think being a bit more proactive can solve a lot of issues. So
I agree.
Yeah.
And I think people they just need to realize that rate, you know, like levies or fees do go up, and that's okay. And as a building, you know, kind of like gets older, if you're not maintaining it, then all that's happening is you're deferring a debt that you're going to pay at some point, right?
That's right. And this is why, you know, capital, you will see a lot of buildings that, you know, where their capital works fund, or their reserve fund, as it's called in WA, you know, but they're not regularly reviewed. The levies don't change. And so how do they know, you know, what the useful life of various elements in the building still is? You can't properly budget if you don't know, you know, what you're supposed to be forecasting for. And again, they often don't want to spend the few $100s on getting a report, which is stupid, but it happens all the time.
And I look at Mascot Towers, you know, if they actually had undertaken that report in the second year, which was going to cost them $12,120 per apartment, they would have been in a very different predicament than they are now.
Look, we had inspected, I had a look at that. We had inspected that building a number of times over the years, and they were basically kicking the issues down the road every time. And ultimately it's a classic example, really, isn't it?
Yeah, it caught up with them. And even the Miami pancake, right? That initial repair bill was $9 million. 2 years later, it was 15. You know, it's never, you know, there's never a good time to actually put your hand in your pocket and pay for something. But prevention better than cure is definitely my philosophy.
Totally. Yeah.
That's right. And there's always options that people don't realise. I mean, there's a strata finance out there, and it's quite good interest rate. And, you know, a lot of strata companies will say, okay, for owners that may not be able to afford a huge special levy to help with this huge, you know, project that we've got to do, or defect management, you know, they have the option to pay the special levy if they can, either at once or over 4 quarters, or they can, you know, participate in the loan with other owners and pay it over a 5 to 8 year period. You know, there are options. It's just, you've just got to, you know, shop around and encourage the strata manager to, you know, table all those for you if there is a huge amount of expenditure needed, and it's going to eventually cost you money on your asset anyway, because you can't sell a unit that's falling apart. You can't, you know, so you will lose it in other ways. So you do need to invest. We all
Correct.
do. Anyone that owns a house always has to spend money.
Correct, that's right. And you're completely right, Kylie, because a bank won't even lend money on a building that's falling apart, right? So even if you find a buyer, whether or not the bank will think it's a good idea is a whole different scenario. So, you know, I'm seeing in Victoria apartments being devalued from 1.3 to 1 million because they have cladding on the outside of their building, right? So for the cost of $100,000, is it worth actually then restoring $300,000? Is a no-brainer, right? So,
and especially with defects, because now these insurance funds are coming out, which you know all about. You know, you want to spend that money on those defect reports, and yes, they can be thousands of dollars, but you might have access to these insurance funds to get defects rectified. So it saves you hundreds of thousands of dollars, you know. So it's just
it's worth paying. You know, I see some inspections and they're from house inspectors who are going into apartments, and I would like to crucify them. I actually went to an apartment building the other day with, you know, specialists, and we went up to the car park and we saw a stalactite growing out of the car park. You know, that's not a good sign. That's not a good sign. No, that's not a good sign. And, you know, and typically that, you know, the engineer said to me, oh, it's not until it starts dripping onto someone's car roof and they can't get rid of it, that's when they start to make a complaint. And I'm like, come on now, like, I'm looking at a stalactite and I'm alarmed. But, you know, it's all about what you know, right? And
totally.
And so education, is key. All right, so I think it's been really informative. I knew it would be. When I met Kylie, I was like, well, first of all, she's a jacker full of life in terms of her ability to actually chat, and she's so knowledgeable, and so I knew that this would be a really great event, and I'm very appreciative of you also joining us, Michael. So just quickly,
you're welcome.
Bad. The 26th of November, I've got a riveting subject. I know I deal with all the very kind of like amazing things. We're talking about mold in apartments, how to retrofit ventilation and management techniques. And then on the 30th of November, even though it's not on there, the 30th of November, we just agreed today, we're going to do another one about Victoria, because of course now with the Victoria changes to the Strata Act, which come into effect in December, if you're a large strata, you have to have your books audited, but secondly, you also have to have a maintenance plan. So on the 30th of November, we're joining Smarter Communities to talk about maintenance plans and what's involved in them. And then on the 13th of January, we're talking about understanding the sales contract and the small fine print that often we don't look at. So our sponsors, we would like to thank, because I can't do what I do without them. And I'm very grateful to them all. They certainly are very supportive of all these initiatives that I do. And that, I guess, is the end of the session, unless anyone has any further questions. We've got lots of people saying thank you and how informative it's been.
Wonderful.
So, yeah, I think that's been great. I really appreciate your time today, and I really appreciate your intelligence on this matter, because, you know, you don't know what you don't know, right? And
absolutely.
And I think you certainly highlighted today some things that even I've learned. So I do appreciate that. So on behalf of the Australian Apartment Advocacy, thank you, Michael. Thank you, Kylie. I really do appreciate that you actually have taken the time out today. And as I said, we're recording this session, so I'll send it out to all those people who couldn't quite join us tonight, as well as those who did. So thanks very much, guys.
Well, wonderful. Thank you for letting us be a part of it. And we're always here to help.
Exactly.
I appreciate that very much. Okay, guys.
Thank you very much.
Bye,
Cheers.
everyone.
Bye, everyone.
Bye.
See you. Thanks, Kylie and Michael. I appreciate that.
Yeah, no worries. Thanks, Sam. That went well. So hopefully I got a bit out of it.
Yeah, no, I think you did a great job.
And if you want to top and tail it for your recording, if anybody who was on the call has a specific question that they want to ask, then they are welcome to ring our 1300 number, and
I'll give them your contact details, Michael.
Yeah, and then it's if they want to email us or give us a call, then we're more than happy to help people out if they've got a particular issue, to the extent we can anyway. Yeah.
Perfect. All right.
Okay.
All right.
Thanks,
All right.
guys.
Thanks, Sam. Nice talking to you.
You too.
All the best. Bye.